In this presentation, we will continue on with the setting up of customers and beginning balances. Last time we entered the customers and beginning balances. This time we're going to take a look at the financial statements and enter the information onto those financial statements, the balance sheet and the income statement. Let's get started with Sage 50 Cloud Accounting. Here we are in our Get Great Guitars file. We're in the customers and sales section. Last time we had entered our customers, our 3 customers, as we can see on the right hand side, and we entered the beginning balances for them. We can also take a look at that information. We go to the customers and sales, and we go down to new customer or view and edit customers. So if we go into view and edit customers, this is another area that we can add that information or add new customers or make adjustments to them as needed by selecting the new button up top. So last time we did it with like kind of the get started wizard. This time, or a few times in the future, you can do it here as well. Also note that when you make an invoice or some type of sales form, you can say, okay, let's go down here. I'm not going to actually make the invoice. We're not going to complete an invoice, but we're just going to take a look at an invoice. If we were to open up an invoice now, of course, within the customer field, we will have our customers. So if they are return customers, we can make them there, and we can make new customers on the fly, kind of as we go as well, on the fly, as they say. Okay, so I'm going to close this back up, and now we want to consider the financial statements. I'm not going to save this. We're not going to save that invoice. And we're going to consider the financial statement. We should see an accounts receivable account, you would think, for that $20,500 now for those 3, receivables we have from those 3 customers we set up. So let's go to the reports and forms drop down and go to the financial statements. And then within the financial statements, we're looking at the good old balance sheet, So we'll open that one up. I'm going to bring that back to period 1. Let's bring it to January. So January is what I want to be running that for. And note we don't see anything in the accounts receivable. So it should be in the subledger, but it's not yet in the receivables on the financials. Therefore, we're going to have to enter a journal entry. Let's take a look at the subledger. I'm going to go back on over to the reports here, back to the reports, back into the accounts receivable up top. We're looking at the aging report, so the aged receivable. I like calling it accounts receivable aging. They call it aged. It's an aged receivable. The receivable is aged. So we're going to go down here. We can see it, the $20,500. So it's in the subsidiary ledger. The subsidiary ledger should be tying out to the general ledger, or the trial balance with the balance sheet. So let's go ahead and then do that with a journal entry. So I'm going to close this back out. I'm going to close this. And let's go into a journal entry, which I like to go with the tasks drop down, tasks. And then we're going to go down to make a journal entry. So we're going to go down to the journal entry. And then I'm going to make it as of, let's make this journal entry as of the end of last period. So let's actually make it as of 12/31/19. It shouldn't matter. We could make it as of January because I'm going to put the other side into equity. But sometimes I like to put it in the prior period before the cutoff date. Because that way, if there are any accounts that you put in that are income statement accounts, they'll roll over to the equity in the current time period. Again, it won't matter here. You could make it in January 2020. Yeah, that would be fine as well. So we're going to be saying that there should be an increase in the receivable now. The accounts receivable should be going up. So that's going to be account 11. And I'm just going to call this the beginning balance. And then the debit is going to be for that. I think it was $20,500, I believe. I should probably double check it, huh? Let's double check it. $20,500. I knew it. I didn't even have to check. I'm not checking next time. I'm just going crazy, pushing forward with it. And then the other side is going to be going to the equity, some type of equity account. So let's select the drop down. We're going to put it into some type of equity account. So I'm looking over on the right, the account types. Retained earnings is probably the one we should be going to, so that's one we will use. And I'm going to say this is a credit of $20,500 as well. There's our debit, there's our credit. Let's go ahead and post this out. So I'm going to save this and then check it out. It's not a valid date because I went before the time period. So I'm going to say, all right, let's put it in there as of 2020, and I'm going to make it January 1st. Okay, and so that because I set up the system and I set it up as of the beginning of the year, January 2020, they won't let me post something to the prior period. That's okay. So I'm going to say save, and you're about to say the transactions. I'm going to say yes, please. And then I'm going to close this back out, and let's check out what happened then. Let's check out what happened. Let's go back over to the balance sheet. And then if it didn't refresh, you can hit the little refresh button, but mine is refreshing automatically. So there's the 20,000 up top. If I was to double click on that to look at the detail for it, there we have the detail, the 20,000. If I was going to double click on that, you can see that it is the journal entry that we have entered for that. Closing this back out. Note then that this should always be tying out. That 20,000 should be tying out to the accounts receivable aging report, or the aged receivables, because the aged receivables is going to be the same amount by customer, and that should be tying out to the accounts receivable on the balance sheet. As we go forward, as we make forms and whatnot, that will typically be the case, because the driving components of the accounts receivable will be increasing by things like the invoice, pretty much only the invoice, and then they're going to be decreasing when we receive a payment. Both those forms will have attached to it a customer. So it'll typically always tie out unless we do something funny to it, such as make a journal entry or something like that, adjusting journal entries at the end of the year possibly, and not assign a customer to it. And so we want to be careful with that. We want to be obviously tying these two things out. These two reports should be tying out for the most part, unless there's some kind of unusual activity, such as an adjusting entry or something like that, in which case we should be able to explain what the variance is between those items. So that's going to be it for now. Let's get out of here.